Is the world ending? The clock is ticking and the economic world is collapsing. If you're an investor, you might be really scared as the S&P and 500 have officially entered a bear market. Moreover, the FTX crash happened and left many people insolvent. One might even say that this might be the worst recession we ever have. Nevertheless, hard and tough times create strong men. So the real question is, how do you survive this recession? Hi, Matrix Money Maker here, and in today's video, we will see how you can survive this recession and thrive financially. Make sure to subscribe and watch until the end to see what you should avoid and what the rich do during a recession to stay rich. So, what is a recession? The word recession often sets panic among the population. However, most people don't know what a recession is. To keep it super simple, a recession is a period of time lasting a few months or years, during which the global economic activity massively decreases. It is safe to say that very short periods of decline are not called a recession, and therefore not every crisis is considered to be a recession. A recession can be caused by several factors. It can be caused by inflation. In economy, inflation refers generally as the rate of increase in prices over a period of time. Inflation is typically a broad measure, such as the universal increase in prices or the increase in the cost of living in a given country. On the other hand, deflation, when the prices fall and the purchase power of the dollar increases, can also cause a recession. Other factors of a recession can also be high interest rates and lending problems. Moreover, a recession has bad consequences on the overall functioning of the economy. It results in higher unemployment, business going bankrupt, and real estate crashes. Don't stress, stay calm. Many investors pull their money from the market at that time. Even though a recession affects everybody, the rich as well as the poor, it is not a reason to panic because it is in tough times that there are the most amount of opportunities. So the first thing to do when living during a recession period is to calm down. Recessions are not permanent, and although they can last for a long time, the times that follow are always better. Even the Great Depression only lasted several years before the economy grew even stronger and faster, leading to the most prosperous economic times that the US had known. That is why you need to stay strong and be careful in not falling into fear, uncertainty, and doubt. Lower your expenses and live below your means. One absolute habit that you need to develop to survive this recession is to save as much money as possible and to live below your means. This means lower your expenses and do not buy anything useless or that you don't need. As the prices are getting higher and more people are unemployed, for the time being, don't plan on buying a new car, a new house, or something unnecessary. This is the time to save and wait for the end of the recession. During this period, you need to think about the future and about how you're going to pay off your debt. Unfortunately, most people are raising their expenses as their income increases. You can see them moving into brand new homes, and as the recession goes more intense, they will probably regret their decisions. Learning to create a budget and live below your means will help you a lot when tracking your income and knowing what you are doing with your money. Therefore, you will be prepared to go through tough periods of time such as this recession. Thinking twice about everything you want to buy will help you survive during these periods. Pay off your debt. It might be the time to refocus on new investments and priorities into different assets to help you fight the losses you made or to find a new source of income to allow you to survive during these difficult periods. Invest in consumer goods, healthcare, and energy because they are always solid investments during bear markets, as they're vital to every person and population and will probably see less losses than the other assets and sectors. In fact, you might even get good return on investments in these markets because whatever the financial situations, people need critical consumer goods. Furthermore, paying off your debt doesn't make sense for every single situation. Simply said, it makes sense to pay off high interest debt as fast as possible and to make minimum payments on low interest debt. Instead of putting all your money in paying low interest debt as quickly as possible, that money can be invested to earn more interest in your paying. As the interest rates are increasing, if you don't pay your debt will only be increasing month after month. You will have very low expenditure for the rest of this period, which is very convenient for surviving this recession. You will have no credit cards, loans, or mortgages compared to someone that is drowning in debt. This will probably allow you to have a more peaceful life and help you sleep better at night. Be prepared. When facing a recession or a bear market, it is often thought that it is the end. However, history speaks for itself, and if you study history, there is no reason for you to be scared and afraid. The stock market crashes around each 3.5 years, and after those tough times, the economy and the market recovers on average in less than a year. These periods often don't last for long, so if you are careful and study your history, there is no reason you should not be prepared for this and know what to expect. Moreover, even though you feel uncertain about the future and the economy, the market will not always stay negative and there are positive times to expect. Maintain leverage and be consistent. Maintaining a good level of debt and not borrowing more money will allow you to maintain a good position during a recession. And of course, whether you invest in traditional investments, in stock markets, or in crypto, the key during a bear market is to not try to time the market, as nobody knows what can exactly happen if the market is at its lowest or at its highest. Stop trying to find the bottom and believing that you can get in at the right exact period where you would make the best profit. During a recession or bear market, it is time for you to start investing responsibly and like a grown-up. Start investing using dollar cost averaging. Invest a set amount, no matter what it is, whether it is $500 or $1,000 at a set time. If you get paid on the 30th, then you invest every time that you get paid on the 30th and keep functioning that way. And trust me, in the long run, this method is far more successful than trying to figure out when it is the best time to invest. Just as Warren Buffett says, time in the market beats timing the market. Buy low, sell high. As Warren Buffett also says, be fearful when others are greedy and greedy when others are fearful. During misfortune times, when the market crashes, be ready to invest because it is during those times that there are the most opportunities. Investors that often bought assets at a discount price when the market was low got well rewarded when the market went high again. And like the fact that timing the market is a bad idea in the stock market, when the market is at its low, there is an abundance of opportunities as you can buy an extremely valuable asset at a cheap price and hold on to it until its value skyrockets. This is, however, a thing that is only doable for persons with a certain amount of cash to invest in risky assets, and if done properly, is a way to become rich and wealthy during a recession. Subscribe and turn on the notification so you don't miss more videos about how to make money, personal finance, investing, and much more. Check out the latest video about the 10 principles to follow for a wealthy life. Take care.